How does one of the smartest men who ever lived, the man who discovered gravity and calculated the motion of the planets, lose a fortune equivalent to millions of dollars in the stock market? This isn't a riddle, it's a true story, and it's a terrifying lesson in how mass hysteria, corporate lies, and political corruption can create a financial monster that devours everyone, from the lowest servant to the genius Sir Isaac Newton himself. This is the story of the South Sea Bubble, the incredible scam that convinced an entire nation to trade its security for a fantasy, and in doing so, created one of the most spectacular financial crashes in history. Our story begins in 1711. Britain was a rising global power, but it was also broke. Decades of war with France had left the government with a mountain of debt so massive it threatened to bankrupt the nation. The government needed a miracle. And then a group of cunning financiers presented one. They formed a new company, the South Sea Company. Their proposal was audacious but brilliant. They told the government, "We will take on your massive debt. In exchange, give us a monopoly on all trade with the Spanish colonies in South America, the fabled lands of gold and silver." To the desperate government, it sounded like the perfect deal. There was just one tiny, catastrophic problem. The South Sea Company's business plan was a complete fantasy. Spain controlled South America, and they had absolutely no intention of letting their British rivals trade freely in their ports. The company's supposed monopoly was, for all intents and purposes, worthless. But the public didn't know that. All they heard was South America, gold, and infinite riches. The company's real business wasn't trade, it was financial engineering. They encouraged ordinary citizens to swap their safe, boring government debt certificates for exciting South Sea Company stock. At first, the stock price was stable, but then the company's directors, with the help of corrupt politicians they had bribed with shares, began to spread incredible rumors of impending trade deals and unimaginable profits. And the public took the bait. A wave of speculative madness swept across London. The price of a single share began to rise, from £128 in January of 2020 to £350 in March, then to £550 in May. A frenzy gripped the nation. Everyone, from the highest lords to the lowest maids, scraped together their savings to buy in. Coffee houses in London turned into chaotic, primitive stock exchanges, where fortunes were made and lost in a single afternoon. The rising price became its own advertisement. People weren't buying shares because the company was valuable. They were buying because they believed someone else would pay even more for it tomorrow. This is the very definition of a speculative bubble. The mania grew so wild that other, even more absurd companies, known as bubble companies, popped up. People invested in companies for importing jackasses from Spain, or, my personal favorite, a company described only as being for carrying on an undertaking of great advantage, but nobody to know what it is. People lined up to give their money away for a secret. By the summer of 1720, the madness had reached its absolute peak. The South Sea Company's stock price skyrocketed to an unimaginable £1,000 per share. The company, which had still not conducted a single real voyage of trade, was now valued at more than all the land in England combined. It was a national delusion. And it was at this peak that Sir Isaac Newton, one of the most cautious and brilliant minds in history, made his fatal error. He had invested early and made a handsome profit, selling his shares for a 100% gain. He cashed out, content with his earnings. But as he watched from the sidelines, the stock price continued its insane climb. His friends and colleagues were becoming fabulously wealthy, and he was missing out. Overcome by the fear of missing out, Newton abandoned his own logic. He famously lamented, "I can calculate the motion of heavenly bodies, but not the madness of people." He jumped back into the market, investing his entire fortune at the very top of the bubble. But every bubble, no matter how grand, is destined to pop. Inside the South Sea Company, the directors knew their enterprise was a fraud. They began to quietly sell their own shares, cashing in their paper fortunes for real gold. Word began to leak out. A few knowledgeable investors began to sell, then a few more. There was no single event, no great crash, just a slow, terrifying realization that the fantasy was over. Panic set in. The stampede for the exits began. Everyone tried to sell at once, but there were no buyers. The stock price didn't just fall, it plummeted. From its peak of £1,000 in August, it crashed to £150 by the end of September. Fortunes vanished overnight. Banks collapsed, credit dried up. The nation plunged into a devastating economic depression. Thousands were ruined. Suicides were rampant. The public, once euphoric, was now filled with rage. They demanded justice. A parliamentary investigation exposed the massive fraud and corruption that reached the highest levels of government. Politicians were disgraced, and company directors had their estates confiscated to compensate the victims. Sir Isaac Newton lost over £20,000, a sum equivalent to several $1,000,000 today. He was so devastated that for the rest of his life, he forbade anyone from even speaking the words South Sea in his presence. So what does this 300-year-old story of a corrupt company and a financial bubble teach us today? It's a timeless and humbling lesson in human psychology. It reminds us that no one, not even a certified genius, is immune to the irrational pull of greed and the fear of missing out. The assets may change, from a trading company in the 18th century to dot-com stocks in the 2000s or cryptocurrencies today, but the mechanics of a bubble, driven by hype and the belief in endless growth, remain exactly the same. History reminds us that the market can remain irrational far longer than you can remain solvent. It's a brutal lesson that the collective madness of a crowd can easily overwhelm the logic of an individual, and that any investment built on pure fantasy rather than real value will eventually and inevitably return to its true worth, nothing. If you find these lessons from the past essential for navigating the present, please show your support with a like. And to continue this journey through the forgotten financial stories that shaped our world, be sure to subscribe.